Hello and welcome to Daily Nifty Insights. Let's study, explore, and understand the current stock market with the help of performance of Nifty. Today is 15th June 2020, and we will be estimating the probable moves, resistance, and support levels, along with the new emerging trend in Nifty for the next trading day. That's on 16th June. Today, the market opened with a bearish bias, taking weak cues from global and domestic markets, slow recovery of economy, increasing cases of COVID-19, and in fact, no development on corona vaccine so far. These are some of the factors which are driving the market at present. The market breadth today remained negative with only 8 stocks advancing and 42 stocks declining. You can see the daily Nifty chart on my screen. It opened today at 9,919.35 and the opening loss in the morning was 53.55. It witnessed sellout in the morning and it touched day's low at 9,727 points, which we had already shown in our chart as a strong support level yesterday. In the second half, Nifty saw some kind of short covering and also buying emerged from DIIs at lower levels. And finally, Nifty closed at 9,813.7 with a net loss of 157.2. Let's observe and see what kind of scenario is emerging from the charts and data available with us today. So if we look at the chart, we can see that today Nifty made lower high and higher low. And the candle which has been formed today, it is well within the previous day's candle. And this kind of pattern is called in candle consolidation, right? So basically no new trend is emerging, but within the ascending channel, you can see that the price remains within the descending channel, right? This is the channel we have drawn, and the consolidation happened well within that descending channel, right? And if we look at from the candlestick perspective, this seems to be like a bearish harami, and on a Fibonacci level from highest point to the lowest point, recent lowest point, it is at 38%. So it symbolizes the negative bias in the market. Uh, if we look at the market from perspective of price action, for tomorrow, if Nifty tries to go upside, you would see the first level of resistance is coming at 9,843. That is a little above than where it closed today. And the second level of uh, resistance is at 9,889, right? Third level of resistance is emerging at 9,942, and fourth level of resistance is at 10,031 or 10,030.77, and this is also a 100 days EMA, right? And we already know that what kind of role EMAs play, right? 100 days EMA is a very strong support or resistance level. So upside may be limited to this extent. And if Nifty comes downside and corrects further, the first level of support level it will get is today's low, that is at 9727, this low. And below that, we have a 50 days exponential moving average, and that is at 9649. So this is going to work as a very strong support level. And if this level is broken, we would see Nifty going towards 9,600, this level, which it has already seen day before. And on breakage of that, we would see it's going to 9545, right? That's the previous day's low. And for the intraday purpose, if we see that Nifty is breaking 50 days EMA and sustaining for more than 30 minutes, for intraday, we can see the market going towards 9,600. So that could be a bearish position. Now, from price action, the range is emerging as 10,031 to 9,649. So that's a trading range for tomorrow, right? Now let's have a look at what kind of scenario is emerging from option chain built up, right? So which option chain we are considering? We are considering option chain which is uh, of 18th June, expiring on 18th June, right? So what I'll do is I'll take this in another app such that, let's, yeah. All right. So since the market has closed at 9,813, we would be considering 9,800 as an ATM. So this will form our ATM. And at this, in the OTM from 9,800 on a put side, we'll be searching for the support levels. So at 9,800 itself, there is a open interest of 1.1 million, although there is hardly not even a 1 lakh new contracts have come up, right? So anyway, this is going to work as a support one. Below that, you can see almost 3 lakh new contracts have come, and built up is very good. It's 1.9 million. So that will act as a support two tomorrow. Below that, again, a small quantity of fresh contracts created, and overall 1.5 million contracts that will work as S3. Below that, there is a 9,500 level, but even that far off, also not much of put writing has happened. It's only 1.7 lakh contracts created here. However, the open interest is quite high. It's a 2.4 million contracts, right? So this will work as a support 4, and that's emerging as a strongest support, right? Below that, at 9,400, not much writing has happened, although it's 1.5 million. Below that, 9,300, 9,000. Also, you can see 2 lakh new contracts have come. One thing you would observe in comparison with yesterday is the put writing has shifted towards downside, and also the quantity has the quantity of new contracts is reduced, right? So that shows the bulls are not having or not seeing much strength coming up in Nifty. Now, since the strike range is still quite wide where substantial open interests are there, we can say that there is a volatility downside, right? Now, looking on the other side, yeah, one more thing we can observe on this side is above 9,900, there is a huge unwinding of puts, at 9,900 also. So the participants are not seeing, although there is still 500,000 contracts still existing there, but I think bulls are a little scared this time, right? And on call side, let's see what kind of resistance is coming up. At 9,800 level, a small amount of calls have been written, 1.8 lakh, and overall 9 lakh 75,000 contracts, almost 1 million we can consider. So this will work as a resistance one. On above than that, at 9,900, you can see 500,000 contracts fresh and 1.36 million overall contracts. So that will work as a R2. Above than that, at 10,000, 500,000 fresh contracts and overall 2.2, let's say 2.3 million contracts. So this will work as R3. And you can also observe that this is the highest level of open interest, right? This is highly concentrated. So this might act as a very strong resistance level, but you know, it's a market and it can go left, right, anywhere, right? So if 10,000 level is broken, you can see 10,100, 10,200. Again, at 10,200, more than 2 million contracts. So maximum 10,200 could be the trading range. On the lower side, 9,500. That could be the very wide range, right? And if you look at from the intraday perspective, you look at the PCR. So the PCR for this series is 1.03 now. It was 1.21 yesterday. So PCR has decreased. That also reflects that, you know, from somewhat a little mild bullish a PCR, we have reached to the neutral PCR, right? And looking at these call writings, you can see that the call writing has shifted downside. So it shows the bearish bias, and the quantum of call writing is much more than the quantum of put writing. So that shows that the bears are stronger at this point of time. Now, for the intraday purpose, if we look at the trading range, we can say that 9,600 to 10,000 could emerge for tomorrow as the trading range. Of course, it can be breached and index can go 100 point plus and minus, right? So that seems to be how data and charts are talking about index. Now, looking at provisional data, we see that today FIIs have sold almost 2,960 crore rupees worth of equities in cash market, while as the DIs had been the net buyers, and DIs were net buyers with 1,076 crore rupees in cash market. DIs are also net long in future of Nifty and Bank Nifty. However, FIIs as well as pros are net short in Nifty and Bank Nifty. So that shows that they have a bearish bias. If we conclude based upon the points we've taken from option chain as well as the chart, we can say that RSI is near 55, and today MACD has given a bearish crossover, right? So let's look at these points. So RSI is at 55, as well as if you see the MACD is now, both the lines have converged, and a little downside, there is a negative bar. So not much buying is happening, or rather not much strength is emerging in buying, right? So that shows the kind of scenario emerging as a consolidation and correction. So you can see that in coming few days, Nifty would be range bound but volatile. If Nifty closes above than 10,031, that will give strength to bulls to take the Nifty towards 10,330. But if it closes below 9,649 based upon closing basis, it will encourage bears to pull down it to 9,500 or 9,400. The daily Nifty range emerges as 9,600 to 10,000 for the next trading day, which will be with volatility. So traders are advised to have a neutral outlook, and one can initiate the delta neutral option strategies for trading. If you are intraday trader, it will be better that your positions are hedged either with a futures position if you are trading in equity, or if you are trading in future, you can hedge your position with the options, either put or buy call. I trust this analysis will help you to navigate through the market with the favorable and profitable trades. Thank you very much for watching the video. To get latest information, please subscribe to our YouTube channel, and don't forget to press the bell icon so that whenever there is a new video loaded, you get a notification. To learn about stocks, derivatives, commodities, forex, trading, investing, technical or fundamental analysis, you can also request video of your choice in the comment box. Thank you once again for watching and liking the video. Please share the video with friends and concerned traders who could also be benefited from quality knowledge and analysis. Good luck, happy trading, and happy investing.